Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad. And it looks like, it's going to be another subdued day for the markets because so far Nifty has extended the sell-off to the third consecutive session itself. And it has slipped below that crucial 25,800 levels, which it had held on to as well. But yes, while we did start flat today, but we went on to see some good recovery. But the picture has changed after 11 a.m. when the selling pressure intensified. If you look at Sensex, that has also tumbled by about 270 points. Nifty also below that 25,800 mark as of now. But yes, a broader end of the markets. Yesterday, this was the end of the markets which helped limit the downside. But yes, once again, today it has succumbed to the selling pressure. If you look at the Nifty mid-cap index, it's showcasing a decline of about 1%. Small cap index showcasing a decline of about 0.7%. Now, that has resulted to the weakening of the breadth of the markets as well, where declines have once again dominated the street and have taken the upper hand as of now. But yes, among the sectoral indices, if you look at Nifty Consumer Durables, after yesterday's good move, once again has turned negative. Nifty Consumer Durables showcasing a decline of about 1% as of now. 1.5% cut coming in for the Nifty Consumer Durables as well. And apart from that, if you look at IT, PSU banks, auto, all of these stocks continue to see a cool off as of now. On the other hand, if you look at some resilience that was observed in Nifty Metal Index, showcasing a gain of about 0.4%. Pharma Index also showcasing a gain of about 0.2%, and Realty Basket as well, showcasing a gain of about 0.3. Nifty Realty, which was showcasing gain, however, it has dipped into the negative territory. Once we refresh the rates, 0.3% decline coming in from there. On the other hand, if you look at Nifty Media Index, it's showcasing a gain of about 0.5%. So all in all, it's a subdued sense of markets, and it doesn't come as a big surprise because global markets were also on a negative footing. US markets yesterday, it did end on a mixed but largely on a negative note. Asia Pacific markets also started the day largely on a negative note. Even European markets, for that instance, has also seen a little bit of a cautious trading ahead of the FOMC outcome, which is due later tonight, where the market participants are expecting that the Fed is expected to cut the rates by about 25 basis points. But yes, some further commentary on how the rate cut trajectory pans out for the next year, how the governor change is expected to also trickle down. And of course, the third thing is that how the inflation trends are going to pan out. All of this tariff noise is something that everyone has been watching out for. But yes, coming to our own markets, let's take a quick look at what the top gainers and losers look like on the Nifty 50. Eicher Motors showcasing a gain of about 1.4%. It's also surged to the fresh 52-week highs, and the stock has been doing well. HDFC Life also snapping its two-day losing streak, so showcasing a gain of about 1%. Metal stocks have done well, and as a result of which you can see Tata Steel, Hindalco, both of these stocks showcasing a gain of about 1% each. Sun Pharma and SBI Life, some of the other gainers on the Nifty 50. However, on the losing end, you can see Indigo showcasing a decline of about 3%. Yesterday, we did see a little bit of a reprieve, but today, once again, it has succumbed to the selling pressure given that the DGC has revised order of cutting 10% flights, revised its early order of about 5%, and right now they have already ordered that 10% of flight should be cut down as of now. Eternal also seeing a decline of about 2.5%. Yesterday also the stock was under selling pressure due to the block deal. Today also once again it has been trailing, one of the top Nifty losers. Trent showcasing a decline of about 1.5%. Shriram Finance and Adani Enterprises, some of the other losers on the Nifty 50. But yes, to understand the last minutes of the trade and how you should be positioned in an environment like this, I'll quickly go across to the technical expert of the show, Ashish Bahety, a technical and derivative research analyst at ProfitMart Securities. Ashish, good afternoon. Once again, Nifty has extended the sell-off to the third consecutive day. And for this entire week, Nifty has slipped into the negative territory. Week to date performance, it's 1.5% decline. So what do you make of this subdued sentiment, and of course, what are the next levels?
Yeah, good afternoon, Lovisha. It's been a painful week, I'll say. Nifty has slipped below its almost 4 week of gains, or 4 week of lows, slipped below the lows of the consecutive 4 weeks. And there's a clear pressure or a pain in the broader market. The breadth has become more bad. When I say about an index, it's still it's decently placed. It's still above, nearing its on a weekly 10-day exponential moving average. But if you'll see the mid cap and small cap, there the pain is much higher. We've seen today Keynes and Dixon slipping, almost hitting lower circuits. So the pain on the broader market is much higher compared to the index, what we are seeing. On the index, yes, there's a resistance, clearly a resistance near 25,900, and that should be a stop loss for anyone who is short. Any pullback can be used as a shorting opportunity. On the lower side, we anticipate the Nifty may touch 25,500, and if that gets broken, then we may even see 25,200. So the next probable support area or zone where Nifty can the fall can halt is near 25,500 zone. For the Bank Nifty, this was the index which was showing relatively much strength compared to Nifty. We have seen yesterday also both HDFC and ICICI were holding their crucial levels. HDFC was trading above 1,000 and ICICI was hovering near 1370 to 1380 zone. But today we have seen there's a selling pressure in these two names also. So Bank Nifty is also now looking relatively weak. We are hoping that next probable target for Bank Nifty on the lower side would be 58,400. The shorting, any pullback can be used as a shorting opportunity. The stop loss one should maintain on the resistance area on the upside, which has become 59,200.
Okay, all right, 59,200 for Nifty Bank. All right, you were talking about the broader end of the markets. Yesterday it was the day of recovery for the mid cap and small cap index. But once again, today they have succumbed to the selling pressure. What can we watch out next? Can we see a further fall for the mid cap and small cap indices?
See, mid cap overall, there is a huge pressure in the mid cap index. And if I'll say Nifty mid cap 100, there the pressure is inching higher compared to the larger index. So we have on the downside, we assume that Nifty mid cap 100 might even touch 5,800 or might even slip below 5,800, 58,000 zone.
Okay, all right. That's the level for the broader end of the markets. Of course, mid caps and small caps seeing a bit of a selling pressure in today's trading session as well. But yes, let's move on and talk about IT stocks. They continue to see losses for the third consecutive day. Ashish, how do you view this decline? We've seen a good rebound in the past couple of months, but once again, Nifty IT is seeing a little bit of a setback. Some profit booking could be on the horizon. But anything that you're finding attractive from the current levels from the IT basket?
Yeah, so we have a diversified opinion on the IT as a pack full. We are negative on the large cap IT, or however, we are positive on the mid cap IT stocks. So, just a second. Considering the rate cut expectation or the Fed meet ahead, so one should be a little cautious here. Any buying opportunity should be seen in the mid cap IT only.
Okay, all right. Some buying opportunity in mid-cap IT itself. But yes, it's the metal stocks that have drove the markets today. If you look at Hindalco, Tata Steel, all of these are some of the top Nifty gainers in today's trading session. Ashish, Nifty Metal, once again, you're bucking the trend. What do you like from this space? And of course, how does the near term look like for the Nifty Metal Index?
So certainly non-ferrous metal stocks are looking really good, and the way both precious and the base metal, industrial metals are moving, they're inching, making all-time high. We've seen silver surpassing $60 mark. So certainly Hindustan Zinc and Hindalco remains the fresh or the preferred pick. Even Vedanta is the preferred pick because both have a silver as well as copper exposure to copper exposure. So our preferred pick from the entire pack would be Vedanta. It has both precious metal as well as industrial metal combination, and the way every down tick is being used as a buying opportunity here by the investors, looking really good on the charts. We are hopeful the stock may touch even or make a fresh high of 570 zone. So it's a buying opportunity. However, one should keep a strict stop loss of 500 here.
Okay, strict stop loss of 500 here for Vedanta as of now. Right, let's move on and talk about Nifty Auto Index. I mean, it's once again in the deep in the red. If you look at the Nifty Auto Index, down with about 0.2% decline. Ashish, we did see a good December data in terms of wholesales and retail figures for the Nifty Auto Index, but of course, the index itself has run up quite a lot. So, how does the sentiment look like to you for the near term, and of course, anything that you're liking from this, auto space?
There's a profit taking. We are not negative on the auto as a space as a whole. We are thinking it's a profit taking here right now, and the market is because of the broad based index selling and the FI selling, the auto is getting a heat of the sell. Of the entire pack, we are more bullish on the two-wheeler auto space. So Bajaj, Eicher, and TVS remains a fresh long pick for this space. However, we are kind of neutral for the large cap, I mean, for the four-wheeler auto space. From the commercial vehicle, I think Tata Motors CV is looking good on the charts.
Okay, all right. Tata Motors CV, good on the charts. All right, let's take some of the individual stock movers. Then let's talk about Interglobe Aviation. Of course, the stock has been in focus and in the headlines in the back-to-back day after we did see that after we did see some negative news that came in for the counter. Today, once again, the stock is down by about 3%. After the DGCA asked the airline to cut its flight operations by 10% for its winter schedule compared to the earlier order of 5%. Now, the original winter schedule of this year was supposed to be around 2,200 flights, but that 10% impact is going to be around 2,000 flights itself. So, this would mean that the total number of flights for the Indigo during the winter schedule is even lower compared to what they were operating during the summer schedule. Ashish, coming to you. I mean, yesterday some bit of a reprieve we saw in the stock, but today once again the sentiment has turned negative. So, is it a clear avoid for the time being, or the right time to buy for the long-term horizon?
See, the worst is not over yet for the Indigo airline. We think there will be more trouble ahead for them. And even chartically, every pullback is used as a buying selling opportunity here by the traders. So one should remain cautious here. Don't try to do any bottom fishing, or don't try to catch the falling knife here. We may see stock even slipping back to 4,500 or 4,600 zone. So another 200 to 300 point fall can happen in the stock. Pullback can be used as a shorting opportunity. Anybody who's holding a short should maintain a stop loss of 5,000 rupees.
Okay, all right. 5,000 rupees as a stop loss for Interglobe Aviation. That is something that we need to watch out for as well, given that all the management CEO has been summoned to understand, whether or not daily operations and, of course, how they plan to resolve this particular crisis. All right, let's move on and talk about another stock in focus. That is your Hindustan Zinc. The stock has been doing well today, given that silver prices has surged past $61 and they have inched close to an all-time high. Now, with that, the gold-silver ratio has dropped to about 69x, sharply lower from about 95x earlier this year, and has fallen below 70 for the first time in more than 4 years itself. Now, given that Hindustan Zinc remains the pure listed silver play in India, and silver accounts for about 40 to 45% of the company's EBIT, that is what is making the stock quite buoyant in today's trading session as well. Ashish, I mean, in the past 1 month, also the stock has gained quite well. So, can we see higher highs from here on?
Certainly, this stock is doing fabulous on the charts, and the way silver is moving is probably chart. Silver charts are the chart of the year. I'll say every dip is getting used as a buying opportunity there. And when the silver gave a clean breakout above 37, we have seen no reversal for the silver even on the daily time frame or a weekly time frame. However, I'll say about Hindustan Zinc, stock has made a good base around 450, and now it is inching higher. The recent high somewhere around 2024 was almost 750 for the Sun. So there's enough headroom left for the stock to surge up. A dip can be used as a buying opportunity. Today, certainly the stock is up almost 4.5% in the intraday trading session. So don't chase it for a short-term trade perspective. One can be long here for at least as a swing trade by keeping a stop loss of 495 for the next probable target of 560.
Okay, all right. Next target could be 560 for Hindustan Zinc. Let's watch out for that. But yes, let's move on and talk about another stock in focus which has been grabbing headlines this month. That is your Keynes Technology. The stock has once again succumbed to selling pressure today after Kotak and Nomura both cut their target prices on the counter after the recent sell-off. Kotak wrote in its fresh note that certain aspects which is related to intangible accounting and elevated working capital still remains quite unclear, and it has also said that the company's guidance for FY26 is still at risk. The management did clarify earlier in an analyst call that the company will be turning cash flow positive by end of this fiscal year, and that the discrepancies in the disclosures will not be repeated again. But yes, the stock once again has fallen today on the back of the fresh report. And of course, today it's seeing a decline of about 10%. Ashish, what's your view on Keynes Tech? I mean, this stock just got removed from the F&O ban, but today once again it's seeing a slide of about 10%.
Stock is sitting in pressure. If you'll see in just last 2 months, stock is down 50% from its recent high of 7,600 zone. And there's no respite for the stock. Given these levels, we are seeing massive selling today. Also, stock hit a lower circuit. And both, I mean, not just the re-rating of the whole space is happening along with the corporate governance issues. So both is adding up to towards the downfall of the stock. In last 1 week, last 4 weeks, I'll say, or last 1 month, stock is down almost 40%. The stock is at a crucial level of February low. Stock is approaching the February low, but if that gets broken, stock may even slip back to 3,200 or 3,300 zone. So one should absolutely remain cautious here. There's no averaging or buy on dips is advised here. Every pullback can be used as a shorting opportunity in the stock.
Okay, all right. The entire AMS stocks have also seen quite a bit of a fall today. PG Electroplast, Dixon Tech, all of them seeing a decline of about nearly up to 6 to 7% itself. Even if you look at Amber Enterprises, that is also down in today's trading session. Are you cautious on the entire AMS stocks at this point of time, given that we're seeing a little bit of a turbulence in Keynes Technology?
Yes, absolutely. So that's what we said. With reference to Keynes, there are two things at play here. The sector tailwind is very weak. The sector outlook is very weak, along with the corporate governance issue. So entire sector is looking weak. Both Keynes, Dixon, or PG Electroplast, they all are had a very high elevated valuations, and with such sort of margin levels, elevated valuations is not justified or not sustainable. And we are seeing massive profit taking here, even shorting here in these stocks. Just to remind you, these stocks have seen a fabulous run in the year 2023 and 24. So yes, there's enough froth still available in these stocks, and that's what we are thinking, that there's even in these prices, there's room to short, and stock may even slide further down from here.
Okay, all right. That's the view coming in for Dixon Tech as well. Let's move on and talk about Dilip Buildcon, that particular stock. Of course, we've seen that the company has won about 5,000 crore contract from NALCO for Potangi bauxite mine development itself. But the stock has remained unenthused in today's trading session. If you look at the stock, it's seen a decline of about 3.5%. And from a YTD perspective, also the stock has remained quite wobbly, and it's seen a decline of about 2% itself. Any thoughts on this particular counter, Ashish? Dilip Buildcon?
Yeah. So last week we have seen a good run up in the stock. Stock was up almost 5%, and yesterday we have seen a good run up in the stock. Stock was up almost 5% in yesterday's trading session. Today, yes, there's a reversal, but till yesterday's lows is safeguard or is intact. Stock is still a buy on dip kind of a category. So anybody is holding long, or the support area for the stock is yesterday's low, which is 434 zone. On the upside, yes, there's 200 EMA is acting as a resistance, which is placed at 480. So on the upside, 480 is the resistance area. Support is 430 for the stock.
All right, 430 as a support for Dilip Buildcon. Let's move on and talk about another stock in focus, that is your Adani Green. We did see a large trade that took place on the stock, and as a result of which the stock is seeing a decline of about 0.5% or so. Now, as many as 3 crore shares of Adani Green changed hands in the large trade that took place in the pre-open block window, and the shares that have changed hands was at an average price of about 970 rupees, taking the total transaction value to about 27 2,700 crore rupees itself. The buyers and sellers are not known in the transaction as of now, but yes, the stock has been pretty volatile this year. Ashish, what would you expect from Adani Green? Can the trend continue? Today we are seeing a large block deal on this particular stock.
Certainly. So in that Adani pack, we've seen the morning first hour session. We've seen a good buying in that Adani pack, and even Adani Green in today's trading session made almost a high of 1027. And from there, after the first half an hour or so, you've seen a continuous selling in the stock, and stock has slipped back below its 1,000 area. So stock has broken the key support area, which was 1,000, and stock is moving into a bear side trajectory. So a pullback can be used here as a shorting opportunity. Certainly, the resistance area is now 1,000, which was the support area. So 1,000 should be the stop loss. On the downside, we think stock may even touch 970.
Okay, all right. That's the view for Adani Green. Let's move on and talk about another stock in focus, that is your Subex. The company has bagged about $1 million worth of fraud management project in Europe as well. Today also the stock surged as much as 6%, but right now the stock has given up its gains. It's still flat with a positive bias as of now. Ashish, how does the stock look like? I mean, from a near-term level perspective, because today the stock saw a good breakout, but yes, the stock has been trailing and exhibiting a negative trend.
Yes, there's certainly a selling pressure in the stock, and today's rally didn't sustain. I mean, even after the good positive news flow that somehow got used as a sell on news kind of category stock it has become. So one should stay very cautious here, because a crucial level of stock did attempt to give a breakout about 12 rupees, but it didn't sustain, and it looks like the stock may have slipped back to 11 rupee category.
All right, sell on rise on the basis of news. That's what you're saying for Subex itself. Right now, the stock has given up most of its gain, trading flat with a positive bias, 0.4% gain coming in for there. All right, let's move on and talk about LG Electronics. I mean, the stock has got its first bearish rating after the consensus buy calls it received after its listing. So we can see that Kotak Institutional Equities that has initiated a reduced rating on the counter, and they have given out a target price of about 1,600 rupees per share. Which implies a marginal downside from the current levels. But they believe that the stock is already fairly valued at the current levels. And given that the brokerage believes that the launch of affordable appliances, expansion into new categories could aid growth. But given that the company has built some of the key risks include the potential market share loss, changes in the related party systems, and of course, royalty issues as well. Ashish, what's your view? I mean, the stock, of course, there's going to be limited data, but for the near-term trajectory, how does the stock look like? Because today it's seeing a decline of about 2%.
It was a bumper IPO. IPO was priced around at 1140, if I'm not mistaken, and stock opened almost at 1700. So absolutely there's a profit taking here by the people who applied for the IPO. I think the anchor investor of the first anchor investor lock-in is already opened here. So we may see some supply coming here on the stock. However, the price discovery on the lower side is yet to happen. But on the lower side, I think yesterday's low become a crucial point, which is 1530 area. So anybody who's holding long should just maintain a stop loss of 1530. If that gets broken, you may see even more slippages here. Because we've seen many of the decorated IPO have done fairly bad in last 2 years. Stocks like HDB or Bajaj Housing Finance, even Tata Technologies, they were all decorated IPOs and they saw massive IPO gains. But however, after that, there was a huge selling. So my advice would be to remain cautious here.
Okay, to remain cautious for LG Electronics. All right, let's move on and talk about another stock in focus, that is your Adani Enterprises. Well, the stock is seeing a decline of about 1.5%, one of the top Nifty losers as well. And the near 25,000 crore rupees rights issue is expected to close today. And as per data available, the rights issue which opened on November 25th, has been subscribed by about 91% so far. But yes, Ashish, from a technical perspective, Adani Enterprises, how does it look like on the charts for the near term?
See, there's the entire group is seeing a selling pressure. Even Adani Enterprises in the morning first hour of session, stock hit 22. Stock was trading about 22.50, and after that there was a selling pressure from there, from that trajectory. So it looks like there's the sellers are getting activated here, and we may see even 21.50 on the charts in a couple of trading sessions. The on the upside, the resistance area has become 22.50.
Okay, all right. That's the view for Adani Enterprises. Let's move on and talk about another stock in focus. That is your AU Small Finance Bank. The stock has been bucking trend, 2% gains coming in for the counter. And the bank did see that it has got an approval for the government to increase its FII limit in the bank from about 49% to maximum permissible limit of 74% of its paid up capital. Today, the stock has done well and the chart looks quite amazing this year itself. Ashish, can it sustain its trend?
Certainly, first I'll have to give a disclaimer. We have given a buy recommendation on the stock in last month, and we've been continuing or upgraded our recommendation on the stock. Coming to the charts, stock is showing massive relative strength, where we are seeing there's a most of these banks, most of the private sector banks are trading below their 200 or key exponential moving average. This stock has made even in today's trading session a fresh all-time high. And yes, because of the market volatility, we've seen some profit taking from today's high level of 1007. But we remain bullish on this stock. If you'll see today's trading volume, it's almost close to 7 million shares so far, which there'll be a high delivery volume for sure today in trading sessions. Any dip can be used as a buying opportunity. Stock has a good support area near 970.
Okay, 970 for AU Small Finance Bank as a support level. All right, let's move on and talk about another stock in focus. That is your Kalpataru projects. The stock is seeing a decline of about 2.5%, but the company did secure new orders, which was worth about 2,000 crore rupees, and that has taken the yearly order book to about 17,000 crore rupees itself. But yes, Ashish, I mean, what do you expect from the stock? Because the stock has already underperformed quite a bit this year.
Yeah. So most of these, I'll say, stocks of related to infra is seeing a lot of selling pressure. So Kalpataru project is looking weak on the charts. One should keep a stop loss of almost anybody. I mean, in fact, there's no shorting here since it's not a part of the F&O stock. The support area for this stock is 1140.
Okay, 1140 for this particular stock. All right, let's move on and talk about Vodafone Idea, because in the past 2 days, the stock has already gained about 8% and it has also neared its 52-week high levels itself. Ashish, what can we watch out next? Right now, however, the stock has given up its gains. It's turned flat to a negative bias as of now.
It's tough to comment on the stock. The stock has been very notorious, and we've seen most of the time there's before the news there's a build-up happens in the stock, and usually it moves in a inverse direction compared to what the technical analysis looks like. However, just on the basis of support and resistance, 10 rupee 50 paise has become a strong support for the stock. However, on the upside, there's a lot of resistance. We've seen every pullback is used as people offload their shares in the stock. However, 1150 is a strong resistance area for the stock.
Okay, 1150 is a strong resistance area for this particular counter. That's Vodafone Idea. Let's talk about another stock in focus. That is your Anupam Rasayan. The stock has climbed today given that it has entered US CDMO via the Jayhawk Fine deal itself. And that's why you can see the stock has seen good run up today. But of course, the stock has fizzled out its gains and right now it's flat to a positive bias as of now. But yes, Ashish, from a technical perspective, Anupam Rasayan, any thoughts on this particular counter?
Yeah. So a lot of chemical and chemical ancillary related stocks are looking good on the charts. We are seeing good buying in these stocks. Even in today's trading session, I think even Navin Fluoro and other chemical stocks were doing good. So here, chart is showing strength. However, because of the market volatility, there's some profit taking today happening in this stock. The strong support, which is now for the stock, is 1270. On the upside, we assume that stock may even head to 1180 trajectory.
Okay, all right. 1180 trajectory for Anupam Rasayan could be possible. All right, the last rates coming on your screen of where we are standing as of now. Sensex is down by about 290 points. Nifty has also ended in the negative territory. It's down about by 25 758 levels. 0.3% decline coming in for the Nifty 50 index itself. 81 points decline coming in for the Nifty. Of course, it's the third straight consecutive session where Nifty has ended in the negative territory. But yes, it slipped below that 25,800 mark that we were anticipating to hold on to these levels. But yes, if you look at Sensex, also slipped about by 0.3%. Bank Nifty closing in the red, 0.4% decline coming in for the Bank Nifty index. Broader end of the markets, if you look at Nifty mid cap, showcasing a decline of about 1%. Small caps also showcasing a decline of about 1% itself. So both the broader end of the markets definitely tilted otherwise, and right now it's underperformed the benchmark index itself. But from a sectoral perspective, it was the metal and pharma stocks which bucked the overall market trend today. And however, what did not do well in this market was the Nifty PSU banking index, showcasing a decline of about 1% as of now. On the other hand, Nifty consumer durables once again sulking in the trade after yesterday's good pickup. Nearly 2% decline coming in from the consumer durables basket. Of course, yesterday we did see a reprieve in Kaynes Technologies. That's why we saw a little bit of a recovery in the consumer durables basket. Today, once again, Kaynes Technology has succumbed to the selling pressure. Nearly 10% decline came in for this particular counter. That is why we are seeing a decline of about 2% on this index level too. Nifty IT index also showcasing a decline of about 1% ahead of the Federal Reserve's policy outcome. Nifty auto index succumbing to the selling pressure, 0.1% decline coming in for there as well. Nifty realty index also showcasing a cut of about 0.5% itself. But yes, coming to the top gainers on the Nifty 50, Eicher Motors once again dominating the list. 2% gains coming in for this particular automaker. But yes, Ashish, coming to you, I mean, so far this year, Eicher Motors has done quite well. 50% gains, and today also it's one of the top Nifty gainers, fresh 52-week highs. What can we expect next?
Yes. So, out of the entire auto space, I think two-wheeler stocks are looking really good. And out of the entire pack of two-wheeler, Eicher has shown massive strength. Every dip is getting used as a buying opportunity here. Our target for the Eicher is 7,400. Any dip can be used as a go long strategy. One should keep a stop loss of 7,100 in the stock.
Okay, 7,100 is a stop loss for Eicher Motors. Let's discuss about another top loser on the Nifty 50. That's your Eternal. The stock is down by about 3% itself. Yesterday also the stock saw a bit of a selling pressure. But yes, yesterday it did end up in the green. But today, once again, it's one of the top Nifty laggards. Eternal, any thoughts on this particular counter, Ashish?
Most of these stocks of new age stocks are seeing some selling pressure here. Eternal has been a good on the weekly and monthly chart. There's still some strength there, but however, on the daily chart, stock is now approaching its 200 daily exponential moving average, and if that gets broken, we might see even 260 on the charts. So, a little piece of cautious advice is advised here. One should keep a strict stop loss. Anybody who's short should keep a strict stop loss of 290.
Okay, strict stop loss of 290 for Eternal. All right, just one last question before we let you go, Ashish. Anything that will let us know your top picks and what are you finding interesting in the markets as of now?
So, AU Bank has remained our top pick from the banking side, and on the metal, we are bullish on the Vedanta.
Okay, all right. Vedanta and AU Small Finance Bank. Okay, those are the two stocks we need to watch out for. All right, on that note, we have to let you go, Ashish. Thank you so much for your time and joining us.
Thank you.
All right, all in all, it was a negative day for the markets. Once again, third straight day of losses for the Nifty that has come in. Nifty has once again slipped below that 25,800 mark. And this time, a broad end of the markets have contributed to majority of the declines. If you look at the Nifty mid cap and small cap index, once again seeing a decline of about 1% each. Yesterday, we did see a recovery that came in from the broader markets. But yes, the picture has turned quite worse. And that reflected in the breadth of the markets today, because the advanced decline ratio that is standing at about 1:1. But yes, all eyes will be set on whether Powell comes in and instills some optimism in the markets. 25 basis points rate cut, that is what we are watching out for. But we'll be watching out for the further of Jerome Powell's commentary on how the rate cuts could point out for the next year, how the dot plot is going to be, and of course the economic projections as well, whether or not inflation is going to be tamed as it was this year for the US economy itself. But yes, so we do have a positive note that came in from a global brokerage house, Citi, where they expect that Nifty is expected to gain by about 10% by next year's end. So this year so far we have seen already Nifty has gained by about 8%, and now with such optimism places us for a long good term vision as well. But yes, Citi is also listed of 5 particular stocks as its contrarian bet, that is your ICICI Pru Life, Jubilant FoodWorks, Voltas, Lupin and HPCL for 2026 itself. And they've projected a potential upside of up to 40% for all of these picks. But yes, for 2026, they've also remained overweight on banks, telecom stocks and autos, while they have remained underweight on IT services, consumer staples and metals. So basically, Citi does expect Nifty to reach up by about 28,500 by December 2026, suggesting about a 10% upside basis on its 20x one-year forward PE ratio. Now, what they believe is that certain improving consumption trends and early signs of urban recovery is what is going to make Nifty reach new highs in next year itself. But whether or not that takes place is something we'll understand with our next guest of the show. Let's quickly go across to understand how the market looks like for the long term. Joining me is Chakri Lokapriya, CIO Equities at LGT Wealth India. Chakri, good afternoon. From being a top global performer last year to a relatively weaker one in 2025. So how does the market structure at the current stage look like to you?
Hello, thanks for having me. You said it right, so what happened is from in April, the expectation was India would have one of the lowest tariffs in the versus the US India tariffs. And it turned out by the time we're in December, India has the highest tariff. And accordingly, the rupee has fallen, the markets have not performed well, and that is the major overhang for the market.
Okay. But we have some policy tailwinds that came in. I mean, GST, RBI, all of these reforms, and now everyone has been pointing out that Q2 could be pointing out to an end of these downgrade cycles. So what is your projection for FY26 and of course more importantly for FY27?
You said it right in terms of the policy tailwind has been the what has helped the market, and whether it is RBI rate cuts, the country's balance sheet is still doing well, the inflation is under control, and India is on a rate cut cycle. So and the GST cut, of course, and all these things have helped the market in sustaining itself. But the lack of the US-India tariff deal is unlikely to what you call increase the earnings estimate for the second half of this year. And that is the big expectation in the market, which if it does not materialize, can lead to some amount of earnings downgrades.
Okay, so have you revised your earnings, growth projections for FY26? Because earlier we started the year with about 13 to 14% of earnings growth, but right now the consensus has been about 10 to 11%. What is your estimate?
I think by the time we end this year, it will probably be around that 8 to 10% mark. Now, if in case for the US trade tariff deal is in place, then the earnings for FY27 would be revised upwards, and that would take it up to 13 to 15%, but we'll have to wait for the deal to materialize.
Okay. A recent data, that's pointed out that, the average returns in the IPO market has fallen this year compared to the past 2 years. So what do you make of this sentiment? And of course, given that the IPO market has been still fairly better than how the secondary markets have panned out, how do you juxtapose both of these arguments?
There'll always be good deals and expensive deals, and the good price deals have done well. So this is a cyclical thing, and I wouldn't worry too much about it. There would still be, those expensive priced ones, but that's all right. I think this is good for the market because it widens the slate of companies that one can buy from.
Okay. Chakri, but while we did see FII sell-off in the secondary markets, but primary markets is something where they have participated quite well this year. So do you believe that the secondary markets value has become quite overheated and now they are squandering for value, and that's where they are trying to find value in the primary markets and of course in the new listings?
In the primary market, they start off with the best foot forward, and companies are, priced so that the offering is successful. And therefore, the FIIs have participated in that market. On the other hand, the secondary market is about an existing companies growing faster than expectations. And those expectations, rather than growing faster, have actually failed to meet expectations. So on the back of that, yeah, FIs have also been steadily selling down from India.
Okay. But for an earnings growth, I mean, what do you make sense? Because on one hand, we have the RBI's rate cut, which could probably keep margins at bay for majority of the lenders. But IT stocks are yet to see some of the growth visibility. So both of these major units of the market, still something that we need to keep an eye out for. What is your assessment?
You're right. Both the financial services as well as the IT sector are actually placed very well. The financial services cycle will benefit from higher credit growth from as the interest rates are cut down and as the economy revives. And second, the bank balance sheets and the NBFC balance sheets are in good shape. Their NPAs are low, their capital adequacy ratios are strong, and the valuations are reasonable. And therefore, it's an opportune time to buy financial services. In addition, in the case of IT services, the stocks have fallen. They are undervalued versus their growth prospects. These growth prospects have actually slowed down. But I think as the second half happens, that will accelerate, and therefore it's a good time probably to buy into IT.
Okay. Chakri, we saw quite a sell-off that happened in the AMS space as well. Keynes Technology, PG Electropras, Amber Enterprises, all of these stocks did see some selling pressure today. While there was some optimism that came in yesterday where a certain section of the brokerages have been saying that given the sharp correction that has happened in EMS space, they're finding the valuations quite attractive from the current levels. But yes, the news-based event has not gone as of now. What are you making sense of, and how are you approaching the EMS space as of now?
The EMS space is actually a very valuable space. Both electronics, semiconductors are areas of growth. Keynes has been an unfortunate example of some working capital issues and revenue issues which have hampered the company's stock price recently, and that collateral damage is being seen on the other EMS sectors. And I think that is just par for the course. But as a sector, it's a very valuable sector. Yes, the stock prices had run up quite a bit. So at the back of bad news, you've seen some accelerated selling. But I wouldn't take too much into worry for the other companies.
Okay. Not just Keynes, but Interglobe Aviation has also been grabbing headlines. Yesterday it did see some reprieve, but today once again there has been a selling pressure, and today the stock was down by about 3% itself. How are you approaching there? Because we have the DGCA asking the airline regulator to to reduce their flight operations by about 10% itself. Are you seeing an incremental hit to their earnings going ahead?
We would continue to stay away from Indigo. And I think the company is expected to actually cut its earnings estimates because there are a number of factors which will lead to that. One is hiring additional pilots, additional costs as a result. Second is, of course, more the industry-related news, oil price going up, the rupee falling. All these things will contribute to a higher expense for Indigo. And on top of that, there is some amount of management uncertainty because the government is now imposing a bunch of restrictions on it. So it's best to wait and watch.
Okay, best to wait and watch for Interglobe Aviation. All right, let's move on and talk about the defense sector because that is also corrected from record highs. But from a valuations perspective, how you place there? Do you think much of the future earnings growth is already baked into the stock price? Because if you look at Nifty Defense Index itself, it's down by about 20% from its record high levels that it had hit earlier this year.
Defense as a sector is extremely well placed, and that this is just a short-term readjustment of prices. If you look at companies like Bharat Electronics, they trade at about 38, 40 times, and for a growth and an order book which is visible well into the next several years. So there is earnings visibility, and now there is an industry which is now growing much faster than it did in the past, and the range of products that they manufacture and sell is also expanding. So I think that's definitely a sector to hold for the longer term.
Okay, okay. We discussed a range of sectors, but tell us your top sectoral bets. Where are you favorably placed in the current market scenario?
It is exactly the two sectors that you further earlier alluded to. One is financial services, and second is the IT sector. If you take IT as a sector, basically, so the AI, artificial intelligence spend, infrastructure spend in the US, which is running at about $100 billion per quarter, has now reached a certain level of critical mass. Therefore, the need for integration of AI is going to happen. And that integration of services is going to be led by the IT services company, the Indian IT services company. And therefore, we're going to see, I think, an earnings upgrade in the IT services cycle. And therefore, it's a good time to buy. On the other hand, financial services, balance sheets are very strong, valuations are reasonable, credit cycle is in its favor, interest rates are going down, and therefore I think it's a good place to be in buying financials across the board.
Okay, okay. Banking and IT. And something that you're conservative on, Chakri? Anything that you would recommend investors to remain on the sidelines for the time being?
I think the industrial cycle, some of them, some of the product companies have actually run ahead of themselves. And I think we have to give it time for the valuations to catch up with the new earnings trend. And until then, we'll wait for the sidelines.
Okay, okay. But, I mean, what do you think that it's going to be the next trigger for the markets so that, it can move higher going ahead?
The macros are fine. India's macros are fine. The corporate balance sheets are strong. The consumer is not so leveraged. And therefore, the ingredients are in place. And the trigger really is the US-India tariff deal. If that happens, I think we would expect to see a significant re-rating of the Indian market.
Okay, yes, the US delegation is here. We'll watch out whether or not there is any progress on the trade deal front, even if there is no trade deal. But of course, in terms of talking points between the two parties itself. But yes, with that thought, we have to let you go, Chakri. But thank you so much for your time and joining us.
Thank you so much.
All right, that's all we have in this edition of Closing Bell. We will be watching out for the FOMC meeting tonight. 25 bips is widely expected, but signs of future rate cut path for the next year is something that the markets have been keenly awaiting for. But yes, with that, it's a wrap from me. Thank you for watching, and we'll be catching up with you tomorrow morning.